emerging market investments for over 4 decades. And Mark, thanks a lot for joining in. Always great speaking with you. You recently stepped down from your position at Mobius Capital Partners. I didn't get a chance to congratulate you on your new journey, so congratulations on that. You stated that you plan to work on new projects in Dubai. So what would your focus area be in your new capacity?
Well, actually, the base is Dubai, but it's going to be global emerging markets again. But the focus will be more on technology. We're looking at companies and situations and areas where AI is being used more extensively, and the entire digitization of the economies around the world, particularly emerging markets, is very important. And of course, India is probably the best example of that.
So are there any tech-focused AI companies in India which have caught your fancy so far?
Not yet. We haven't identified any specific candidates, but we're looking very hard, not only in India, but globally. It's important to remember that when we say tech, it doesn't necessarily mean a technology company per se. In other words, a semiconductor company or a PC company, but companies that use technology to improve their profitability and their efficiency. And that's where AI comes in.
Okay, that's amazing. We'll come back to AI in a bit, but recently, Mark, you did tweet your cautious stance on investments in the China market as well. You spoke about how the domestic market in China is struggling a bit. Does that mean that more money will flow into India versus China over the next, say, 12 to 18 months?
Well, it's already happening. If you look at the numbers, you'll see flows of money coming into India have been quite substantial and are increasing. And that includes not only portfolio investment, but also private investment. So India is going to be getting a lot of money that normally would have gone to China. Of course, there will be investors who will want to go into China and keep investments in China, but India is going to be the beneficiary of this trend.
Mark, you've always been bullish about India, excited about its tremendous potential, but are you concerned about the valuations?
No, not really, because what we focus on is not necessarily the price-earnings ratio or the price-to-book value ratio, but we're looking at return on investment. And it's amazing when we do scans of the Indian market, how many companies have a high return on investment, which is a good indicator of growth prospects, because if you have a high return on investment, you have a lot of money to reinvest and grow. So this is quite a very interesting phenomenon that we've seen.
Coming back to your focus area, which is technology and artificial intelligence, that's a broad umbrella, right, Mark? There's so many spaces in which AI is used nowadays: healthcare, engineering, infrastructure. What do you believe will be the next growth area under this umbrella itself?
Well, you're absolutely right. It's a broad area. And you look at things like blockchain. Again, it's used in every industry now. But I would say at the beginning, the companies in which we would be most interested in would be those in the software area, companies that are actually developing AI tools that companies can use. So that would probably be the first focus. But soon after that, we will move down into companies that are actually using AI and increasing their profitability as a result.
So globally, which would be the best example? I'm not saying you've invested in a stock like that, but which would be the prime example of a company that you would like, one which is generating, manufacturing AI tools for the world?
Well, probably one of the best examples from a global perspective would be companies that are in the consumer area and using distribution patterns and AI to improve their distribution and their customer base. And probably the very best example globally would be Amazon. Amazon is using AI and all kinds of other digitization tools to improve their investments and also to improve what companies and products they should be focused on for their customers.
Recently, Mark, you put out a tweet where you said that you envision the investment landscape in India evolving to mirror that of the US? And that's a tall statement, because you say that there will be a balance between active and passive strategies, and you foresee mutual funds and ETFs gaining substantial traction. Now, if you look at our market, right, I mean, out of 144 crore people that we have in India, there are barely 16 crore people that have mutual fund folios at the moment, which is not even 11% of the Indian population in investing in mutual funds currently. What do you see as the scope of growth in passive investing over the next 1 to 2 years?
It's going to be very, very rapid, because more and more Indians are aware of the opportunities in the stock market, in the bond market, and you're going to find an incredible growth. In my recent visit to India, I was, by the way, in India for about a month, this last month, visiting 7 cities altogether, and it was amazing to see the growth and interest in equities among the population. So I think this is going to be a big, big growth area. And some of the companies we visited were doing this. They were serving retail clients with a portfolio of index funds and actively managed funds. So I see this as a pattern, which will be the pattern that we've seen in the US will be duplicated in India.
So when we talk about India's tremendous potential, one, of course, is this rapid financialization that we're seeing. In your tours of India over the last 4 decades, can you tell us what has changed? What is it that excites you the most, enthuses you the most in terms of the progress that we've made, which makes you bullish on the markets and the economy?
Probably the biggest change and the biggest mover for India has been the adoption of technology by the government, the digitization of the government services. Of course, starting with the identity card, but then moving into so many areas, which has made government more efficient and has made the individual Indian citizen aware of the opportunities that in technology for them in their own life. So I think this has been an incredible journey. And of course, I think Mr. Modi has to take responsibility and credit for this change. It's quite a sea change. It's something that is quite remarkable.
Okay, that's interesting. So the adoption of digitization by the government, which has been a big focus area, something that continues to be of interest to you. Where else do your interests lie in the Indian market, Mark, over the next, say, 12 to 18 months?
I'm very interested in the travel and tourism area, because in my trip recently to India, all the sites, all the historic sites were packed with Indians. We were the few foreigners available there. I'm sure more foreigners will be coming, but it's the Indians are now really having the money and the eagerness to visit their historic sites and tourism sites. And this is a big, big growth area, I believe.
Zooming out a little bit, how do you see the environment for global markets next year? We've seen yields cool off. Crude prices have also climbed down. Now, this year was one of the best years for the United States. We had the S&P 500 rallying 20%, the NASDAQ gained 35%. What kind of a global environment do you envisage next year, 2024?
I think it's going to be pretty good, because you're seeing inflation coming down pretty rapidly. And interest rates, of course, will follow and are following. So the market should be in a pretty sweet spot for that reason. However, it's important to note that with too much a decline in money supply, of course, markets sometimes suffer for the lack of liquidity. So that's something we have to look at. But I would think that we're looking at a pretty good year coming in the markets. It's going to be very interesting and I think exciting.
Standing, if the possibility of no Fed rate cuts, because the street is right now penciling in the Fed cuts rates, which will be positive for equities globally. What if that scenario doesn't play out?
Well, it's very important to remember that there's no direct correlation between interest rates and the market. Sometimes the interest rates go up and the market goes down. Sometimes interest rates go down and the market goes up. It's not a direct correlation. So given that situation, we have to look at other factors. And the other factor in the US is, of course, the economy, the growth of the economy. Oddly enough, with all the challenges, China, Ukraine, every other challenge you could think of globally, the US actually becomes more active. Industry tends to benefit from these kinds of changes. So we're seeing employment at high levels and the economy doing very well, even in this very difficult political environment. So I think this is going to continue into next year.
I do want your thoughts on also how India is one of the youngest economies, right, across the globe. I mean, if you look at Gen Z, as we call it, 30% of India's population is in this age bracket of 15 to 25 years, and they will be the next big consumers. What do you see, or rather, how do you see the consumption pattern evolve? And as an investor, how would you capitalize on this?
Well, that's the key. The key is the youth of the Indian population. That's really very exciting, not only for India, but for the globe, because it means that companies around the globe will be targeting India as their next big market. So this is going to be very, very exciting going forward. And one of the reasons why you're going to see much more investment in India is because of that. Companies around the world will want to take advantage of this young population who are getting richer and are ambitious, want to work, want to play, want to spend. This is all very exciting.
Okay.
Mark, just one question from my end. Your new book is out, The Inflation Myth and the Wonderful World of Deflation. Can you tell us the core thesis behind this book?
Yes, well, I wrote the book because I found that the inflation statistics were not very accurate. That's the first thing. But I also wanted to point out to people that technology is like actually making things cheaper. Now, in currency terms, things look like they're getting more expensive. But if you look at the quality, quantity, and availability of high-tech products that are being impacted by technology, you'll see that life is getting much, much better. And we are actually in a deflationary environment. Of course, economists hate the word deflation, but that's actually what it is.
So finally, Mark, you want to advance your target. You had the last time we spoke, you had a Sensex target of, I think, 1 lakh in the next 5 years. We're already at 66,000. Do you want to, speed it up a little bit?
I think I'll stick to that. I don't want to go much higher than that, at least at this stage. Ask me next month.
All right. Always great speaking to you, Mark. Have a great time in Dubai, and congratulations once again on your new venture. We hope to speak to you again very soon. Well, that's veteran investor Mark Mobius, very, very optimistic. He's been an eternal optimist on the Indian markets and continues to do so. Let's slip into a short break. On the other side, Bajaj Auto will be in focus. The stock is trading at a record high. We'll get you all the latest updates from our conversation with Rajiv Bajaj. Stay tuned.